name is Ryan Stewman. I'm the CEO of Closer Capital, where we help entrepreneurs like you secure access to the funds that they need in order to grow and scale their business. I want to give you a financial update of what's going in the market and some of the tools that are at your disposal to leverage other people's money in order to grow and scale your business at a quick rate. What I mean by that is right now, if you're a top tier client and you're borrowing private money works like this. In mortgages, you get or in commercial real estate, you get a low interest rate because it is attached to something of value. Same thing with a car. You get a single digit interest rate because it's attached to something of value. You don't pay, we can collect the house, we can collect the car, whatever the case may be. In a business, if a business doesn't pay, and we had to take over the business, that means that now we have to run a business, which isn't as easy as selling an asset like a piece of real estate or a car. Now we have to be an operations expert, an industry expert. So there's really no recourse on these loans, right? A business fails, you invested in it, you loaned them money, you lose, right? The operator makes a mistake and can't make payments, the investor loses. So because of that, there is a risk factor quantified, single digit interest rate, oftentimes even in hard money loans for real estate, high single digits, but regardless, single digits, double digits, even mid double digits, depending on your credit tier. So think about this. If you were to loan a business that needed money, and you would say, I want a 25, 35% return on my investment, right? Hey, I'm gonna loan you 100 grand over the next 12 to 18 months. I'm gonna need 130 back to make it worth my time and my risk, because there's no recourse if you don't pay it back. So it's a little bit higher risk. So what a lot of people do, especially if they're not 740 credit score plus, they end up taking to get on the financial bus to establish credit for their business and everything else, they end up taking what's called capital infusion or a merchant cash advance. Now, these are two loans that come with double-digit interest rates no matter where you stand. Could be in the teens and 20s. If you have questionable credit and less than perfect cash flow, then you could be in the 30s and 40s in reality. But here's what most people do. They go out to any lender that does merchant cash advances, and let's say they take a 36% interest rate over 12 months. That means if they borrow $100K, they pay back $136K over the course of 12 months. Now, typically on these, they work with a daily, weekly, bi-weekly, or monthly payback. If you have perfect credit, perfect cash flow, you might be able to do a monthly payment. In most cases, it's weekly because the investor, the person that loans the money, they want to see cash flow coming back to them as soon as possible, right? But what most people will do is they'll pay off this $136,000 over the course of 12 months. It's cool, they get $36,000 worth of interest write-off, and they got $100,000 to grow and scale their business with. Some people might say, wow, that's a high interest rate, it's a high risk. Now, if people had a building, an asset, something like that to secure against accounts receivable, I got a guy right now that moves missiles for a missile company. I can't say the name, but he moves missiles for a missile company and had accounts receivable. We were able to give him a low interest rate because he has government contracts. However, most people, especially first-timers, fall into this category. However, there is another tool that when you have this in your belt makes this obsolete. Okay? So, oops. The next tool is this, credit stacking. And you'll have to forgive my writing, the light is shining on this and I can't see shit. So credit stacking. What they'll do is they'll get you 3 to 5 credit cards over a 12-month period up to $250,000. Most people qualify around 100K. All right? These will be 0% for 12 months. Okay? So if I go out and let's say today, right now, I get a merchant cash advance at 30% interest rate. We'll stick to that, 36% interest rate, right? So I make first week's payment, second week's payment. At the same time, I apply for my credit stacking offer. Now, I've got $136,000 owed for the complete term. Now I get 0% and I get approved for $80K on the first credit card. I'm gonna do a loan transfer. We've got $136,000 over here. I'm gonna transfer 80K of it at 0%, okay? Now all of a sudden, what also happens is the sooner I pay this off, if I pay it off early, oftentimes lenders will give you a 25% discount. So of this case, that would be 3.6 is 7.2. That is about a 9% difference, 10% difference in interest rate. So you're probably sitting down at that point 26%. So 10% in interest savings because you paid it off early. But now this has been transferred over to 0% with monthly instead of weekly payments. Okay? So now we got the cash advance. Then we used another tool to pay off the cash advance. Here's where most people make a mistake. They get a 136K cash advance. They don't use this other tool. Shit gets hard because business throws us curveballs. The IRS shows up. Then they go take another $56,000 cash advance because they go get another $25,000 from the same lender in second lien position. Shit, 3-4 months later, if shit still hasn't worked out or the interest is too high, they go get another $25,000 in cash advance in lien position. And now all of a sudden, total debt that they owe is 12, 17, 4, 9, 11 to $217,000 that now they've accumulated in debt trying to pay off the higher interest rate. Now, if you got good credit, the play is to take this 136 minus 80 is 6, 13, 12, 11, 10, 97. 76K, okay? So now we got $76,000 on it. 3 months later, they get you another credit card for another $90,000, okay? We're stacking 3 to 5 up to 250. They get you this at 0% for 12 months. Now you're paying off the remainder of this. You get a 25% discount. So now all of a sudden it is $126,000 that you paid off. And now you've got it transferred over at 0%. And sometimes you can pay the shit off earlier. They give you the discount and they give you the transfer. What I mean by that is they give you the discount and they only charge you the remaining amount, not the interest on the remaining amount. Okay? So now you're in a place to where you go from quick math. I don't have my phone on me, but quick math, weekly payments at 100 grand, 136 divided by 12, the $12,000 a month. So weekly payments of about $3,500 to now all of a sudden you're doing it at 0. And if you were to pay it off in the same amount, 12,000, it'd be monthly payments of $9,000. So you would actually save $3,690, $12,000. You'd save $4,000 a month, give or take, in interest. Now I know these are generalized numbers because I don't have my damn calculator on me, but I'm pretty fucking close mentally when I give you this math. So the problem is most people, they go take a merchant cash advance, they have good credit, they take a merchant cash advance, they get stuck in this repetitive cycle, and that's what lenders want for you. They want you to keep coming back, borrow more money, can't pay off the last loan, need to take another loan until you're financially ruined. At Closer Capital, we say there's other tools that you can use to minimize your risk in these situations. You need somebody on your team when you're running a business, when you're doing things in the financial world, you need somebody on your team with creativity, somebody that understands multiple modalities of getting financing mechanisms into your hands so that you have all of these to deploy at will, as opposed to having the will of the banks imposed on you because you're in debt to them. Our goal is to get you in and out of other people's money as fast as possible with the lowest rate possible in the best terms. Now, sometimes that means starting off in rough waters because of what you've done in business in the past, but we can take you out of those rough waters back into smooth sailing with the many tools. And this is just one. We've got ways to leverage Bitcoin, Ethereum, we've got ways to leverage real estate assets, accounts receivable, all of these things, as well as credit card stacking tools to put you, the consumer, in the best financial system, the best financial situation possible. So if you got something from this and you have questions, you can always call Linda. Her number's going to be down below. That's our automated AI agent. She's brilliant. She can answer all of your questions, 100% confidential between you and Linda. And then you can always apply at closercap.com. I look forward to earning your business. Share this with somebody who needs to learn this lesson, and I'll read your comments below. Catch you on the next one.